Welcome to Mutual Fund Family.
Log on to mutualfundfamily.com for more info.
Life is getting simpler day by day, right from opening a bank account to investing in financial products. Everything is done in just a few clicks, without any hassle going through clutter of forms. What's more, with an endeavor to make investors' lives simpler by helping them select a right product and take an informed investment decision, SEBI has issued a circular to rationalize and categorize open-ended mutual fund schemes in India to bring uniformity in schemes launched by different mutual fund houses by defining distinction in terms of asset allocation, investment strategy, etc., and standardizing the scheme categories and characteristics of each category. Accordingly, mutual funds would now be broadly classified as 1. Equity schemes, 2. Debt schemes, 3. Hybrid schemes, 4. Solution-oriented schemes, 5. Other schemes. UTI Mutual Fund has embraced these changes and have prepared a quick guide for its investors by dejargonizing complex terminologies and list of new scheme categorization at UTI Mutual Fund. Let's look at equity schemes in detail. Check out capitalization-based equity schemes categorization at UTI Mutual Funds, wherein large cap fund will predominantly invest minimum 80% of its total assets in large cap stocks. UTI Master Share Unit Scheme continues to be classified under this category. Large and mid cap fund will invest minimum 35% of its total assets each in large and mid cap stocks. UTI Core Equity Fund, previously known as UTI Top 100 Fund, is part of this category. Multi-cap fund will invest minimum 65% of its total assets across large cap, mid cap and small cap stocks. UTI Equity Fund, merging of UTI Blue Chip Flexi Cap Fund, is considered under this category. Mid cap fund will predominantly invest minimum 65% of its total assets in mid cap stocks. UTI Mid Cap Fund continues to be part of this category. Then, let's look at dividend yield-based scheme, wherein dividend yield fund is a fund that invests a majority of its portfolio in dividend-yielding stocks. UTI Dividend Yield Fund continues to be classified under this category. Then, let's check out value investing-based scheme, wherein value fund will follow a value investment strategy that focuses on stocks which are trading below their intrinsic value. Intrinsic value may be ascertained by looking at factors such as, but not limited to, discounted cash flows, free cash flow yield, earnings yield, replacement value, book value, etc. UTI Value Opportunities Fund, previously known as UTI Opportunities Fund and merging of UTI Multi-Cap Fund, is considered under this category. Then, let's have a look at sectoral or thematic-based schemes that invest minimum 80% of its total assets in equities of particular sector or particular theme, wherein infrastructure theme shall invest in stocks directly or indirectly related to the infrastructure growth and development in India. UTI Infrastructure Fund continues to be classified under this category. MNC theme shall invest in stocks of multinational corporations, MNCs, that are generally characterized by operational and capital allocation efficiencies, brand or technology strengths, amongst others in their respective sectors. UTI MNC Fund continues to be part of this category. Lifestyle theme shall invest in sectors that benefits directly or indirectly from rising consumption, changing demographics, consumer aspirations and lifestyles. UTI India Lifestyle Fund continues to be classified under this category. Banking and finance sector shall invest in stocks of companies engaged in the banking, insurance and financial services related activities of the Indian economy. UTI Banking and Financial Services Fund, previously known as UTI Banking Sector Fund, continues to be part of this category. Healthcare sector shall invest in companies in the pharmaceutical and healthcare sector. UTI Healthcare Fund, previously known as UTI Pharma and Healthcare Fund, continues to be classified under this category. Transportation and logistics sector will invest in a combination of subsectors which will include auto ancillary, railways, ports, airports, airlines, roads, shipping, shipyards, courier services, logistics, and other ancillaries. UTI Transportation and Logistics Fund continues to be part of this category. Last category is a tax saving scheme, that is, Equity Linked Saving Scheme (ELSS) with a statutory lock-in of 3 years and provides tax benefit under Section 80C of the Income Tax Act. UTI Long-Term Equity Fund tax saving continues to be classified under this category. To summarize, let's take a quick look at the comprehensive list of overall restructuring at UTI Mutual Fund for equity schemes. Now, let's look at debt schemes in detail. Debt schemes invest in fixed income securities such as government securities, debt and money market instruments across different time horizons with an aim to provide stability to the portfolio. Before proceeding, let's understand the most important term with respect to the circular, that is, Macaulay's duration. It signifies the sensitivity of bond price to changes in interest rate. Bond prices are inversely proportional to interest rate, which means bond prices rise when interest rate declines, thereby increasing the value of portfolio, and bond prices decline when interest rate rises, thereby decreasing the value of portfolio. Bonds with a longer duration will be more interest rate sensitive in prices and vice versa. Now, let's check out duration. Macaulay duration-based debt schemes categorization at UTI Mutual Fund, wherein overnight fund will invest in overnight securities such as CBLO and repo having maturity of 1 day. UTI Overnight Fund, previously known as UTI GSEC Fund, is classified under this category. Liquid Fund will invest in debt and money market securities with maturity up to 91 days. UTI Liquid Cash Plan continues to be classified under this category. Ultra Short Duration Fund will invest in debt and money market instruments such that the Macaulay duration of the portfolio is between 3 to 6 months. UTI Ultra Short Term Fund, previously known as UTI Floating Rate Fund, is part of this category. Low Duration Fund will invest in debt and money market instruments such that the Macaulay duration of the portfolio is between 6 to 12 months. UTI Treasury Advantage Fund is classified under this category. Short Duration Fund will invest in debt and money market instruments such that the Macaulay duration of the portfolio is between 1 to 3 years. UTI Short Term Income Fund continues to be classified under this category. Medium Duration Fund will invest in debt and money market instruments such that the Macaulay duration of the portfolio is between 3 to 4 years. UTI Medium Term Fund continues to be classified under this category. Medium to long duration will invest in debt and money market instruments such that the Macaulay duration of the portfolio is between 4 to 7 years. UTI Bond Fund is classified under this category. Dynamic Bond will invest in a portfolio of securities across duration depending on the fund manager's outlook on interest rates. UTI Dynamic Bond Fund continues to be part of this category. Then, let's have a look at instrument or credit quality based schemes wherein Money Market Fund will invest in money market instruments with maturity up to 1 year. UTI Money Market Fund continues to be part of this category. Gilt Fund will invest minimum 80% of its total assets in government securities across maturity. UTI Gilt Fund continues to be classified under this category. Credit Risk Fund will invest minimum 65% of its total assets in below AAA and AA plus credit rated bonds or equivalent. UTI Credit Risk Fund, previously known as UTI Income Opportunities Fund, is part of this category. Banking and PSU Fund will invest a minimum 80% of its total assets in debt and money market instruments of banks, public sector undertakings, public financial institutions, municipal bonds. UTI Banking and PSU Debt Fund continues to be classified under this category. To summarize, let's take a quick look at the comprehensive list of overall restructuring at UTI Mutual Fund for debt schemes. Now, let's look at hybrid schemes in detail. Hybrid schemes invest in a portfolio mix of debt and equity with an aim to create a steady portfolio wherein debt would provide stability to one's portfolio, while equities would offer potential for superior returns. Now, let's walk through each category of hybrid scheme in detail, wherein Conservative Hybrid Fund will predominantly invest between 75 to 90% of its total assets in debt instruments and remaining in equity and equity-related instruments. UTI Regular Savings Fund, previously known as UTI MIS Advantage Plan, and merging of UTI CRTS, UTI MIS and UTI SWSP into it, is classified under this category. Aggressive Hybrid Fund will predominantly invest between 65 to 80% of its total assets in equity instruments and remaining in debt instruments. UTI Hybrid Equity Fund, previously known as UTI Balanced Fund, is part of this category. Multi-Asset Allocation Fund will invest in at least 3 asset classes with a minimum allocation of at least 10% each in all 3 asset classes. UTI Multi-Asset Fund, previously known as UTI Wealth Builder Fund, is classified under this category. Arbitrage Fund will follow arbitrage strategy that aims to exploit differences in the price of an asset by simultaneously buying and selling it and invest at least 65% of its total assets in equity and equity-related instruments. UTI Arbitrage Fund, previously UTI Spread Fund, continues to be classified under this category. To summarize, let's take a quick look at the comprehensive list of overall restructuring at UTI Mutual Fund for hybrid schemes. Let's look at solution-oriented schemes in detail. Solution-oriented funds are designed with predefined goals like child education or retirement with a specified lock-in period wherein children's funds are designed for the child's future needs like education, marriage, etc. and have a lock-in of at least 5 years or till the child attains age of majority, whichever is earlier. UTI Children's Career Fund Savings Plan, previously known as UTI Children's Career Balance Fund and UTI Children's Career Fund Investment Plan, previously known as UTI CCP Advantage Fund, continues to be part of this category. Retirement Fund is designed to create a nest egg for your retirement years and have a lock-in of at least 5 years or till retirement age, whichever is earlier. UTI Retirement Benefit Pension Fund continues to be classified under this category. To summarize, let's take a quick look at the comprehensive list of overall restructuring at UTI Mutual Fund for solution-oriented schemes. Let's look at other schemes in detail, namely Index funds or exchange-traded funds will invest minimum 95% of its total assets in securities of its underlying index, that it endeavors to replicate or track. UTI Nifty Index Fund, UTI Sensex Exchange Traded Fund, UTI Nifty Exchange Traded Fund, UTI Nifty Next 50 Exchange Traded Fund and UTI Gold Exchange Traded Fund continue to be classified under this category. To summarize, let's take a quick look at the comprehensive list of overall restructuring at UTI Mutual Fund for Index Funds or Exchange Traded Fund. With the latest categorization changes, your investment journey is now simplified. Go ahead and invest in a scheme of your choice.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Thanks for watching. Drop a like, leave a comment, and don't forget to subscribe Mutual Fund family.